Hey guys, today I'm going to be talking about SPY and just retiring on trading SPY by itself, no other stocks, keeping it super simple and making $10,000 or more. This is my full blueprint. This is what I would do if I was looking to retire. I was fairly lazy and I didn't want to mess around with technical analysis, fundamental analysis, and I wanted a diversified portfolio without having any issues. Set it, forget it, collect a bunch of dividends, collect a bunch of income from options, and just have a good lifestyle. This is going to be a very unique thought process on SPY. And for those of you guys that don't know, SPY is basically an index fund with 500 of the largest companies. Now, back when I was in college, I was learning that index funds are the most efficient way to invest. And I'm actually going to agree that yes, SPY, and I'll be talking about QQQ, I'll also be talking about zero DTE trading. I'm going to be talking about a lot of stuff in this video, but let's start off with one thing first, okay? I'm gonna educate you a lot, so make sure you stick out through the end. SPY is a diversified ETF with 500 largest companies. These companies are the everyday companies that you probably encounter, you definitely encounter, not probably encounter, in the United States. Now, the SPY also has a lot of international exposure, which I'm going to be covering in this video as well. So look, the SPY is composed of IBM, Coca-Cola, Apple, Microsoft, Google, and lots of other stocks that are in healthcare, that are in technology, that are in materials, transportation, and the list goes on. I'm going to set some clear goals and expectations for you. If you have a decent chunk of money and you're looking to retire, SPY could literally be all you need. You don't really even have to focus on single stocks. You don't have to focus on the market because SPY has built-in diversity. It has every single thing within the economy that you encounter every day, driving to work, eating, healthcare, education, and everything else in between. I'm going to be talking about how much money to put into SPY and what your strategy should be. So look, first of all, cash, when it sits and does nothing, loses to inflation. So we know we have to invest. How much should you invest into SPY? Well, the truth is you can invest all of your wealth into SPY. In my personal opinion, I don't even have any real estate. I don't have anything going on aside from the money that I have in my portfolios. Now I have a number of different portfolios and I have my money spread across 4 different brokerages. But the thing is, I don't do anything else but option trade because it provides the most steady passive income. If you're looking for the simplest way to build wealth, an ETF like SPY can get the whole job done. The first strategy that I would run on the SPY would be a covered call strategy. And the second strategy would be selling puts. I'm going to go into detail, but first let's discuss how to actually put your money to work in SPY. So first of all, you have to have a brokerage account. It doesn't matter which brokerage account that you use. Any brokerage account does the same job. It's like a vehicle. It gets you from point A to point B. Now, for SPY, the thing is you can have 100% of your money in it. But how should you actually put that money to work? Should you put all of it all at once or should you put it in over time? Well, actually, when I was working for Goldman Sachs, when people would sell their companies, right, I worked with many CEOs actually that had exits that are $60 million to $500 million. When a CEO or some high net worth individual, and by the way, you don't have to be rich to watch this video, it doesn't matter. When you have a chunk of money, they would put that to work over a 10-week period, okay? What that means is if you personally have $50,000, you would put $5,000, $5,000, and so on and so forth over a 10-week period. Why? This is called dollar cost averaging, and it actually protects you from making a bad timing mistake. So we all know that you can't time the market. That's why watching a bunch of YouTube videos or paying attention to the news isn't really that useful. Yes, it gives you some insight into what other people are thinking, into what's going into our economy, but at the end of the day, nobody can time the market. Which is why if you have a chunk of capital, the smartest thing that you can do is put it to work over a 10-week period into a high quality stock or an ETF like SPY. Now, me personally, this is a little bit controversial, but I personally don't like holding any physical assets. I don't like gold, I don't like silver, I don't like real estate. This is because if you put all your money into something like the SPY, you can generate from 1 to 2 or even 3% per month very safely. Now, if you're going to be running the spread strategy or iron condors or any of the smaller account strategies that I do teach on this channel as it comes to option trading, you can make 5, 10, or even more percent per month. Now, just being honest with you, the more money you make per month really just depends on how much risk you're willing to take. SPY, you don't need to diversify, you don't have to have any other stocks because it has built-in diversification. SPY and QQQ are very similar, by the way. SPY is just the 500 largest company, whereas the NASDAQ or the QQQ just follows more of a tech-focused large cap stocks. So specifically NASDAQ versus SP 500, very, very similar. They basically have the same things, just there's a higher weighted focus on the technology companies such as Netflix, Tesla, etc. So that's why the QQQ has a little bit more volatility, but overall the returns are very similar. And if I were to make a bet over the next 10 years, they're going to be within 50% of each other. Now, I get it, 50% of each other is actually pretty wide. I actually believe QQQ can outperform SPY. So we'll talk about QQQ in just a little bit, but the whole reason is because the more risk that you take, well, the more return that you get. So SPY, QQQ, both very high quality ETFs. Yes, if you want to make a higher return over a 10-year period, I would probably say QQQ is good. But for the purpose of this video, let's just assume they're about the same, because they really are about the same, except for, again, there's a higher tech focus on the NASDAQ or the QQQ. So look, when it comes to risk management, because I get a lot of questions in my Discord community, I get a lot of questions from you guys on this YouTube channel, I'm going to educate you from A to Z on how to trade the SPY and make income and retire on it. You want to think about risk management, because if you're thinking about retiring, you probably have a decent amount of money, right? Or even if you're not close to retiring, but you want to retire one day, you're starting off with a certain amount of money today, and you're thinking, how do I protect myself? How do I manage this amount of money? And what should I be doing with this money to actually set myself up for the future? So whether you have $5,000, $50,000, or $500,000 today, you still have to think about risk management, because when it comes to single stocks, you need to know how to hedge. You need to know when to exit. You need to know when to enter into a stock, right? But when it comes into the SPY, you truly can be as dumb or as smart as a monkey. You really don't have to be a genius. You don't have to have any education. You can practically be a 18-year-old person without ever actually studying anything. You get what I'm trying to get at, right? Not being disrespectful to anyone. I'm just being straight. You don't need any education whatsoever to just put your money in SPY over 10 weeks. And then from that point, how do you risk manage it? Well, you just hold onto it for the very long term, okay? You keep adding money to it. There was a research study done, and there's several research articles that I've read, and I've seen so many throughout my 10 years of experience here. If you dollar cost average, you will beat any person trying to time the market. Even a person that perfectly times the market over a 10-year span, of course, unless there's some anomaly or some 2008 event or some financial crisis, you are going to outperform a person that times the market, meaning that you no longer need to pay attention to the fluctuations of the market. Instead, what you need to focus on is getting capital where you're using it and putting it into a strategy like SPY covered calls and selling puts. Now, what should you do with your salary? Well, for me personally, when I was working on Wall Street, I was making like $75,000 a year, which is not a whole lot of money. I was putting in every single dollar that I could into my portfolio, because if you have a smaller portfolio, let's say you have $20,000 and you can add $1,000 to your portfolio, that is a 5% increase today on your wealth. Now, for me, I have over $5 million in both of my portfolios, as well as some other money in other portfolios. I've, had businesses, I do consulting. I've done a lot of stuff in my life. And for me, the risk management that I follow is very simple. Add as much money as possible to the safe strategies and let this money make you wealthy over time. I believe in getting rich slowly, not getting rich quickly. So I do cover stocks here on this channel that can get you rich a lot quicker. But at the end of the day, it is your choice. You can get rich quicker, you can get rich slower. And these two choices are very important to balance out. And I'm just saying, I'm personally not doing this strategy on SPY because I personally like taking on more risk. I personally enjoy having Palantir, Tesla, Apple in my portfolio. I'm actually going to talk about why I have 63% or more of my money in Apple right now. But specifically, you need to weigh your options. It depends where you are in life. And I'm trying to make this video as specific to you as possible for you to open up your mind and think about this. Because if you're closer to retirement, or your risk tolerance is lower, or you're very busy, you're a family person, you're a family man, you have a family to take care of, you're busy at work, it actually may make sense for you to just have your money in SPY versus watching a whole bunch of YouTube videos and trying to get really fancy. In fact, you can keep it very simple. And the first strategy that I already alluded to is going to be the covered call strategy. For me, the best delta to pick for a covered call is going to be 30. Now, why is it 30? Well, because 30 is really the sweet spot. I've done a lot of research, and if you look at 50 delta, well, that's a very high delta, right? You're gonna lose your shares, you're gonna incur a taxable event, you're gonna have to sell your shares of SPY. Now, if you have a very low delta, well, you're just not going to collect that much income, because when a delta is very low, that means that the covered call or the call option that you're selling is very far away. And the farther an option is, the lower premium that you get. So for me, 30 is that sweet spot. I've been asked a lot about 0 DTE options. Should you trade short-term options? And how do I get into SPY properly? Well, the thing is, you can sell a put option to get into SPY. It's actually very simple. you can also go for a roughly 30 delta. Now, of course, I'm simplifying this right now because, if I were to go into detail, then this video would be like an hour long, but that's not that important because around 30 delta is basically where it makes the most sense to sell put options. So if you go for a 30 delta sell put, well, basically 3 out of 10 times you are going to get assigned. Why 3 out of 10? Well, 30 delta, also delta, it measures how much an option moves, but delta also just gives you the chances that an option will expire in the money. So a 30 delta is basically 30%, and 30% is 3 out of 10 times, right? 3/10. All right. So if you sell a put option, you can get into SPY. One of my recommendations, or, obviously I'm not a financial advisor. I've been working in the field for a long time, but I'm just a guy on the internet. If it was me, I would be selling puts on SPY on a consistent basis, even going into margin. Now, this is a very tough topic because margin is also very controversial, but hey, I didn't really get rich by taking the safe road. So for me, I believe in using margin. I believe in actually putting a lot of money to work, all of the money I have to work, into stocks, into options. So I want you to really think about this because you can make a huge difference in your life by investing today, because this money does compound. Now in present day, both my portfolios are at 5 million. I have another portfolio in 7 figures. I am pushing bigger numbers, and it's much easier to build wealth as I continue to compound. That's because compound interest is one of the strongest forces, and that's something that will really build your wealth. But that happens towards the later stages of your life. Now, I'm lucky enough to be fairly young to start seeing a lot of this huge wealth come in, but I want to say that everyone still has time. You will get to your goal as long as you're investing properly, as long as you're being patient, as long as you're not losing money and you're sticking to a proper strategy. Now, the last thing I want to say is I personally have a lot of money in Apple stock, and right now I am uncovered. Why? 2 reasons, okay? First of all, Apple stock is very similar to the SPY and QQQ. Apple stock is a huge component of SPY, and it is a huge component of QQQ. That's because Apple is a large diversified company and it's one of the biggest companies in the world. So both of those ETFs are holding Apple. So for me, I prefer trading a single stock because there's more volatility, and with more volatility, I can make more option premium. With that being said, I currently don't have any options or covered calls on Apple. Actually, I do. In my portfolio, it's 235 covered call, but there was actually 2 weeks where I didn't have a covered call. And the reason for that is because in a bull market like we are in right now, it's actually not that good to do covered calls. Now, I know I've been preaching options for 5 years now. I know I'm like one of the godfathers here of teaching option education. And here we have a huge family and a large subscriber base where we are trading options. However, I will say that covered calls are not good in a bullish market. Actually, in a bullish market, it's probably much better just to sell puts and get acquired on the stock and just hold a lot of stock and ride the momentum higher. So in my opinion, my humble opinion, you don't need a financial advisor. You don't need a bunch of YouTube videos. You don't really need any courses. You don't need any programs. All you need to do, dollar cost average into SPY, sell covered calls, sell puts, watch the videos on this channel. I literally give everything for free. But if you do want to work with me, if you want to see how I'm trading Mondays and Wednesdays, if you want to see my single stocks, if you want to be part of my bootcamp, which I will show you over a 6-week period exactly what I'm doing, how I'm doing it, and teaching you how to fish for yourself on single stocks analysis, then feel free to click the first link in the description, learn more about my community as well as my hands-on coaching program. And you don't have to because I'm teaching everything for free anyways, but it's up to you, your choice if you want to work with me, more hands-on. Thank you so much for watching this video. Hope that you make money. Hope that you get to $10,000 or more per month. It's not as hard as you think. There is truly a lot of money out there. The market's going up and there's just a whole lot of money to be made. So go out there, make some money, and I'll see you guys in the next video.